Okay. Good evening, ladies and gentlemen. I have great pleasure in welcoming all of you to today's panel discussion on roadmap for post-COVID economy. This is actually the second part of a series of discussions on the economic impact of COVID-19. In fact, we had the first of this session a month ago, and Swatantra TV is really proud to bring out the second edition of the series on economic impact on COVID-19. I also have great pleasure in welcoming two eminent panelists who have joined us for this panel discussion today. We have Mr. M.S. Rajan, former chairman and managing director of Indian Bank, with a total experience in banking industry of close to 4 decades. Mr. M.S. Rajan also holds a postgraduate degree in economics from the University of Madras, with specialization in mathematical economics and national income and social accounting. So in Mr. Rajan, we have not just a banker, but also an economist as well. He's also a certified associate of the Indian Institute of Company Secretary. So he's a company secretary as well. And he joined Indian Bank, if I'm not wrong, 5 years before his retirement. He was chairman and managing director for 5 years. And he was working with Union Bank of India for 33 years. And he has had a stellar record with the banking sector. He was ranked 45th in Economic Times, India Incorporated's most potential CEOs list for 2009. And he was also ranked number 2 among the CEOs of nationalized banks and number 6 among CEOs of commercial banks. Mr. M.S. Rajan for you.
Thank you.
We also have another eminent banker in Mr. C. Badri, a former general manager of Canara Bank. He also has had a stint as general manager and chief vigilance officer at Indian Overseas Bank prior to his superannuation. He has had also 4 decades of experience in banking and finance to his credit. So his forte are banking as well as finance. He has served in various prestigious branches of the bank in Delhi as well as in Mumbai. He was executive secretary to successive executive directors of the bank. He was nominated to represent the bank with Banking Ombudsman. He was also the country head of Al Razuki International Exchange Company LLC Dubai under secondment agreement with Canara Bank. Mr. Badri was the former joint secretary of the Cyber Society of India. This is interesting, banker taking interest in cyber technology. Presently, he is the member in the Committee of Digital India Security Association of India. He has addressed various seminars and meetings, and he has got rich experience in cyber security and in subjects relating to banking and finance. Mr. Badri.
Thank you. Thank you, sir.
Let me welcome both of you to this panel discussion. And I am the moderator of this session. My name is Srikanth. I'm a chartered accountant. And my role is to bring up certain points that I think are relevant or important in the context of COVID-19. And I would let the eminent panelists share their views on these points. Of course, the duration of this particular panel discussion is for about 1 hour, and we estimate that by the 40th or the 45th minute, we will start collecting the questions from the chat box, and we will also be posting all these questions for the panelists to answer in case they have not already covered. So with these few words, let me start the panel discussion. So, Mr. Rajan, I would like to start with you. And we all know that the banking sector is the lifeline or the backbone of the real economy. And unless the banking sector is prosperous and vibrant and robust, the real economy really cannot progress. And we also know that currently the banking sector itself is in a tight corner. Thanks to the spiraling of the NPAs, gross NPAs to the advances. In fact, even by RBI's own admission, they say that the NPA levels will go up from 8% in 2020 to roughly 12% in 2021 March, if not 14% as a worst case scenario. So that is the admission by the RBI itself. The banking sector is not as strong as it is supposed to be. And in these trying times, please let us know, Mr. Rajan, how the banking sector should shape itself to or reinvent itself to support the real economy the way in which the real economy has to be supported in this pandemic times.
Yeah, Mr. Srikanth, Thank you very much, and good evening to all the viewers. When the economy itself is not doing well, the banking sector cannot be expected to do well at all. See, last year by this time, why last year by this time? Even in the March second week, we never knew that a wave is going to come in the form of a COVID-19 and it's going to sweep the entire economy. If you take the Indian economy itself, we have witnessed about 26.4 lakh people are impacted by this epidemic. Of this, luckily 19.20 lakh people have come out and our recovery rate is much better at more than 74%. I am talking about the India as a whole. And there has been a death of about 15,900. GDP growth rate, if you take, 3.9% was the GDP growth rate for 1920. We were all expecting that it will be in the range of some 7 or 8, etc. And if you are going to go through the nominal GDP rate, that is adjusting for inflation, it is about 7.2%. See, banking sector and the economy are closely intertwined. When the economy is not doing well, definitely its impact will be first felt on the banking system. So the banking sector need to safeguard itself. Now, thanks to the regulator, we should place in record our full appreciation to the Reserve Bank of India, which is the central bank of the country. In fact, we can draw a parallel in 2008 when the subprime crisis came. At the time also, the regulator acted preemptively and then he could save the economy, he could save the banking system. Similarly, now also the Reserve Bank of India has acted in a manner, and also the government has also acted with the unity of thought, unity of action, so that they could reduce the impact on the banking system. Yes, RBI governor himself in the monetary policy statement as of August, he has said that no, yes, the impact will be there. It will go up from 8% to about 12%. The gross NPAs are going to be there. You will know that even in the past, the NPAs went up. It was as high as 14%, 16%, but it came down to 8%. I am sure the bankers are addressing this problem. But credit is the need of the hour. All the industries, barring exception, I would say the pharmaceutical industry, pesticide industry, banking industry, insurance industry, you leave on some of the manufacturing industries, you leave alone that, all are impacted. Banks have got a good exposure to the aviation industry, which is worst affected. Banks have got a good exposure to the hospitality industries, which is highly impacted. Banks have also got a good exposure to MSMEs. MSMEs are subjected to, terrific stress. But at the same time, if we go through the RBI monetary policy stance, they very clearly say that no, we will be making available enough liquidity in the system. Banks are required to have what is called the credit discipline. Make available the credit to the needy people. Definitely, banks are aware of the situation and they are trying to do. But at the same time, now what we see is deposits are growing. If you take even as of the August 1st, the deposit growth has been to the extent of around 11% compared to the corresponding period last year. When we look at the credit has gone only to the extent of about 5.8%. There is going to be a surplus. When the surplus is going to be there, banks are going to only make investment in what is called the treasury bills or the government of India securities. And the government of securities also, the interest rate is moving towards the north. So the bankers have to now reinvent, rethink how they should do this and navigate it, because there is going to be a double whammy effect. One is they have to pay that no interest on these things, whatever the committed rate of interest. And another thing, the advances are not growing. They have to go cautiously. They cannot afford to throw the money. And they should navigate through the troubled water in a most efficient manner. This is where now they have to realize and do the things which are required to be done. Now the customer patterns are also undergoing change. Lot of digitalization is taking place. I just saw that even in the chronic situation of the COVID, banks have issued more than 20 million debit cards in these 3 to 4 months. So the people are moving from the branch banking, they are entering to the digital banking. That way they are doing. Definitely, banks are seized of the situation. They are also giving this loan to these MSMEs under the 3 lakh credit guarantee schemes. And also the RBI is also seized of the situation. They also come out with the loan restructuring. I'm sure banks will be tied over the situation, the troubled situation, and they will be able to come out. And definitely each and every bank, the bank's board, bank's operating staff will be putting in the thoughts, and then we will do that. Thank you.
Thank you, Mr. Sundara Rajan, for those wonderful views. Mr. Badri, would you like to add what Mr. Sundara Rajan has said?
Yeah, Mr. Sundarajan has the entire gamut of the situation, and I also second 100% what he has told. In fact, public sector banks have done a very yeoman job in our country. We have all types of banks. We have banks which are in the rural, urban. We have the regional rural banks which penetrate into the villages and serve the customers and take care of their needs. Over the time, banks have tailor-made schemes to finance either the top corporates or a hawker or a migrant or a ordinary retail vendor or so. So banks have got lot of exposure towards this. In fact, Mr. Sundarajan, when he was the chairman and managing director of Indian Bank, you'll be. I don't know whether you know. You'll be. It is a very great thing that he went to Dharavi and tailored a scheme so that it was finance was flowing to them for their betterment and for their prosperity. So banks have got lot of wherewithal, and they have very good systems and procedures in place. They have good monitoring systems in place, so that whenever there are signals, yellow signals emitted when the account goes bad, they can always pick up threats and redress whatever it is required to be done, so that the borrower comes out of the red and he becomes prosperous. And in fact, Reserve Bank of India, as recent as 6th August, they have come out with the 2 wonderful circulars, wherein they very in detail they have discussed the resolution part of the stress assessed due to the COVID-19. And I just went through the circular, and I find it to be very extensive. And these circulars, instructions to the bank, it's not a one-time issue. It is going to keep on changing, probably next month or another couple of months. Seeing this experience of this resolution, perhaps they may fine-tune it and make finer changes, and it is going to be an ongoing. Process. So banks are fully geared, and somehow personally, I don't get perturbed with all these NPA figures and all which are told. What is to be understood is, even if there is NPA, it is all adequately provided for. It is not that once the NPA goes bad and then the whole amount is going to go bad. We have to see what is the net NPA, and then we will have to see what is and it is not that all the accounts are going to go burst on one day. There are a lot of processes involved. You have the IBC, you have the other weapons available to the bankers, which they will use it with the discretion, so that the borrower is not put into difficulty, and at the same time, the bank is also not in the red. So I feel that there is nothing to worry about, but probably we may have to gain experience. It is just like the lockdown. The entire lockdown was to see that what we assess the position and then take appropriate steps. So like that, banks also will take care. We have the state level bankers committee, which goes very deep into the issues of the borrowers like MSME, SME and all. And they will also be sending a lot of recommendations to the government, to the Reserve Bank, etc. And there are associations of SME, MSME, their confederation of business people. They will also be sending their recommendation. And I'm sure that the government and the Reserve Bank will take all those aspects into consideration, and they will certainly give updated prescriptions so that the finance flow is good, the end use is ensured, the customer is put at ease, and he will be supported in this COVID-19 situation. That's my view.
Yeah, thank you, Mr. Badri. I think both bankers have agreed that because of the intrinsic strength of the banking sector, they will be able to tide over the temporary NPA crisis, and they will be able to, support the real economy. That's good to hear that. Now, gentlemen, as we all know, the government as well as the RBI have come out with relief packages, a stimulus package where there are monetary measures, there are fiscal measures, and also there are regulatory measures. So with your permission, we will touch upon some of the monetary measures that the Reserve Bank of India has implemented, and to what extent these measures really help the Indian industry, in particular the MSMEs. If Mr. Sundara, you can touch upon some of the key monetary policy issues and how they will actually benefit MSMEs, because we are more concerned about MSMEs than large corporates, because most of the employment is coming from MSMEs, and they constitute a bulk of the GDP of the country as well. So your views on how effective the various measures have been, and possibly if there's something more to be done also, you could share it with us.
Mr. Srikanth, please permit me to give the complete picture so that we will be able to do that. See, RBI has come out with the monetary policy for the current year twice. First on May 22nd, again on August 6th. Now, how they have addressed this post-COVID issue? I mean, I would like to compliment the regulator that they are doing. What is the stance? Normally, when you are in trouble, you will try to close your purse and protect your interests. Whereas, RBI stance has been, continued to be what is called as the banker's language, accommodating. Whatever the liquidity support that you want, we are ready to enhance the liquidity support for the financial markets and other stakeholders. RBI has made it very, very clear that we are going to, your question, how the banking system is going to meet this, we are going to strengthen the credit discipline. That is also another thing, and improve the credit flow. This is also very, very important. And also deepen the digital payment. What are the things that they have taken? Deepen the digital payment and augment the consumer safety in check payment. This is also another thing. And facilitate innovation across the financial sector. This is what they have attained. See, I see a lot of silver lining, Mr. Srikanth. When the banking system operates, see, what are the things that are going to be there? Industry is impacted, I agree. Now, how about agriculture? We had a bumper Rabi crop. And also, we are going to have the area sown under the Kharif crop is also on the increase. If you take, what is the public cereal, that is the stock that we have at our disposal, it is about 94.42 million, which will take care of about 2.3 times the required level of the economy. And January to March 2020, we have experienced a balance of payment surplus on the current account, first time. And also foreign exchange reserves, if you are going to take into account, it is on the highest level of this, 538.1 billion, which is on the thing. Well, the contraction of the economy is there. I am not disputing it. And mainly it is due to it is not supply side induced, it is a demand side induced. Because of the fear of the COVID-19, People have stopped spending, they have cut their spending because they want to take care of the future. So, demand side uncertainty and the resultant contraction is something new to India. We have not experienced at all. This is the first time that we are experiencing such a situation. Under these circumstances, the government as well as the RBI thought fit to introduce certain actions. Yes, MSMEs are the very, very important. They are aware of this, the role of these MSMEs in the economy, especially with regard to exports, with regard to the employment generation. They don't want the sector to be impacted much. So they introduced this scheme of this, credit guarantee scheme, 100% collateral free MSME loan, as called as, see, the wording itself is very, very important. Emergency credit line guarantee scheme. It is an emergency credit line and provided by the National Credit Guarantee. The guarantee is given to the banks, financial institutions, and also the NBFCs by the National Credit Guarantee. Now, every eligible borrower, there are certain eligibility borrowers, those borrowers who are on the standard account, or if they are in SMA 0, SMA 1, indicating that the past due should not be more than 60 days. These people are eligible on their amount, loan outstanding as on 29th February. On that straight away, 20% of the loan outstanding will be made available as an credit to them. It will be in the form of a working capital term loan. We call in the bankers terminology in the case of the banks and financial institution, or in the case of these NBFCs, it will be given in the form of an additional term loan. And then this is a special scheme to help the small business battling the economic impact of the COVID-19 and also to these mudra borrowers. That way it has been a thing. And originally we said that no, this is to these people who have gotten exposure in the entire financial system up to 25 crore. And then subsequently it was enhanced to 50 crores. Originally we said that the turnover of the people should be 100 crores. Subsequently it was enhanced to 250 crores. And then the banks are also sanctioning under the schemes, and it is being monitored on a day-to-day basis by the Honorable Finance Minister itself, saying that no, the scheme will be 3 lakh crores has been allocated, either till the 3 lakh crore gets exhausted or 31st October 2020, whichever is earlier, that the loans will be dispersed. Definitely, this loan will become handy. Now the question is, what should be the interest rate? Interest rates is also as competitive as possible at the rate of, see, what is your benchmark rate plus 1%, subject to a maximum of 9.25% with regard to these banks and financial institutions. That way they can take it. I mean, we should say both the RBI and the government are conscious of the role expected of them, and they have made it available, and the people are going on availing this scheme. And here I would like to join Mr. Badri in putting compliments. Public sector banks have done a human service by sanctioning maximum loans, and if I say, they have even gone up to the extent of individual loan of 2.50 lakh, which are very, 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 very brittle under this situation.
Thank you, Mr. Sundarajan. I just want to, curious to know, out of 3 lakh crores of money allocated for this particular scheme, how much would have actually been disbursed so far? Because it's nearly 3.5 to 4 months since the scheme was announced. It was announced sometime in May.
Statistics indicate, if I remember correct, around 47% has been sanctioned, about 39% has been dispersed. If I remember correct, my memory comes to my rescue. The percentage wise, this is what is the thing.
Thank you.
Because
thank you.
It's ongoing. People go on approaching and they are sanctioning also.
Thank you. I would now turn to Mr. Badri and ask him whether this deadline of 1/3/2020, which is the date on which every account which qualifies for the restructuring, there is a restructuring package also that has been announced in the monetary policy, and according to that, each account, the account has to be standard as on 1st of March 2020. We understand the logic because they want to have a date prior to the COVID. But what are your views on that? What happens to companies or MSMEs which were actually in stress? Let us say they were substandard assets. Why do we differentiate or discriminate between substandard assets and standard assets when COVID is going to affect everybody in a common way? So what are your views, Mr. Badri, on fixing a particular date which discriminates between two MSME borrowers? That is point number one. The second thing I would like you to throw light upon is in the recent monetary policy meeting, the policy repo rate was kept at 4%. They have not reduced it further. What are your views on that?
Your first question, as regards the target date of 1st March 2020, probably it was filed, that is the final end, year end, and probably the major portion of the business would have been done by that time, and the position of the company as on 31/3/20 would be generally known in normal cases. Probably that should have been the idea that they have 1/3/2020. But that is not final. It is not that it is going to be the final date. Probably the bank corporates and others, MSME stakeholders, etc., perhaps after 1 or 2 months, they will again get back to the government, Reserve Bank, etc., and then they will pose their problems, their issues, and then they will make out a case, probably shifting for a later date. Just like the income tax returns, earlier you had to do it before August or July, but now they have postponed it across the board. Probably the government do that, and I am sure the present, set of people in the finance ministry and all are very, very competent people. And once a representation is made, if at all there is a need to change the date, I think they will definitely take into consideration the difficulties, and they will probably postpone the date. It is like earlier we used to have 31st December as the year end. Subsequently, over a period of time, they have shifted to 31st March. So similarly, probably they will take into account the difficulties, and if proper representation is made, that is more important. See, whatever representation they have to make, they have to make it in a logical, cogent and acceptable way. And once if it is done, I personally feel that the present people in the government and the Reserve Bank will certainly look into that and appropriately extend the date. There is nothing that says that is the Shastra like 2 + 2 is 4 and it's not 5. There is nothing like that. These are all dynamics, changing to the situation, changing to the needs of the people. Ultimately, the government and Reserve Bank are the people. It is not they work for their deadline to finish the balance sheet or something. So I have a feeling that if a case is made properly, I think they will change that. That's my personal view. As regards that, the other question also, as of now, they have said that 4% or so. Probably they will test that in the waters and see how it works. And perhaps if the desired results are not, perhaps they may make alterations to that particular level of the figures. And as I said, again, I repeat, it is nothing final. Now, 2 + 2 is 4, that is final. But these are all dynamics, and our economists, our RBI mandarins, the mandarins in the South Bloc, North Bloc, all those people will put their head, and they will certainly, I am sure that they will be always for the people, and they will see that they are put into a lot of, not put into inconvenience, and their process goes on well. And over a period of time in this COVID-19 situation, by the time it passes off, when this vaccine and all comes, and the movements pick up and people come to their normal state, by that time they will certainly do it. I am personally very confident of it.
I'm only concerned, gentlemen, that RBI has been reducing the policy rates from time to time, so much so that they have reduced 250 basis points from February 2019. That is what the RBI governor says. But to what extent this lowering of the policy rate has got transmitted to the real economy is a question which I would like to ask you, because most of the businesses always complain about high interest rates, and that makes them uncompetitive with reference to countries like China and all that. So despite the fact that it's reducing the rates, it doesn't seem to get transmitted to the real economy, at least not in full. And going by what Mr. Sundara said, 9.2 percentage, if I'm not wrong, that's what you said. And is a spread of 5.2 percentage, is it acceptable when companies are working at much lower margins? Why are our banks, I don't know, because I just want to understand from both of you whether the lending rate of 9.2, which is the lowest, forget the bank, I mean the housing loan and all that, and 9.2 compared to the borrowing rate of 4, is it in order? Your views?
Mr. Srikanth, your previous question, I will just take it and answer it. That emergency credit line, you wanted the figures. I just checked up. As of a latest date, the emergency figure sanctioned is about 47.7%. Disbursed is about 32.9%. Public sector banks in 19.84 lakh accounts have sanctioned about 74,502 crores, of which they have disbursed 68,815 crores.
Wow.
Private sector banks in 2.93 lakh account sanctioned about 54,677 crores and disbursed about 43,985 crores. Okay, this is the thing. See, with regard to your questions on the policy rate transmission, I can tell you in the past, yes, banks were holding it. See, let me also explain. I remember 1972, I joined the banking system. At the time, interest rates were 24%, 17%, etc. Over a period of time, Reserve Bank has also started changing. They introduced the concept of prime lending rate, taking into account and then from prime lending rate, they moved to the benchmark rate. And then in the benchmark rate, they take into account what is your cost of funds. Not only the cost of funds, they went by the incremental cost of funds and also providing for your overhead, pay of a staff salary, administrative expenses, etc. Now, they don't want all these things. They want it to be benchmarked with an external rate. So these are all linked to the external benchmark rate. They don't want your internal rate, etc., etc. And another thing, in the past, transmission was not that effective because banks have gone public. Every quarter they have to show a result. They have to keep all the stakeholders, including the shareholders, happy. So they were trying to beat with each other. What is your net interest margin? I remember net interest margin of 4% is quite common. Whereas that is not the case today. Reserve Bank itself monitors how effectively you have passed on the transmitted rates, reduction in the rates. They are monitoring it very, very closely. And that is why you can always say, RBI governor also says, yes, it is being transmitted ultimately to the customers. Now, there are cases where people are able to borrow at 9%, 8.5%, etc., etc. Gone are those days where I can charge as per this. Another thing, competition. If you are not going to offer the best rate, my competitor is ready to take over this account. So the competitor goes away. I don't want to lose a good account. So I will try to do all the best that I can do to retain this account. That is how it is there. And then gone are those days where we cannot pass on this, whatever that benchmark, whatever the rates, policy rate that RBI conveys, we have to ultimately pass it on to the customers only.
Fantastic. So we can rest assured that whatever reduction in the policy rates will ultimately get transmitted to the borrowers. That's
sure.
Now coming, once again on the MSME part, because MSMEs are our core focus here. Now, there is an interest subvention of 2%, which I think the government was allowing till 31st of March 2020, which has also been extended. But if I'm not mistaken, the interest subvention gets credited to the MSME borrowers only after the year is over, based on audit and all that, how much of interest has been paid and all that. So, at least in this COVID situation, don't you think that the interest subvention has to be virtually passed on? If when somebody is charged 10%, let him be charged 8%. Why does he have to wait till the year end to get the subvention? Your thoughts, sir, both of you. Mr. Badri can answer first.
Yeah, no, it's a very practical and it's a very good suggestion. I think the Reserve Bank and the government should give a thought. If not full 10% submission, at least partially over each quarter they could pass on some subvention, so that to that extent the client gets some benefit and he has funds at his disposal and he gets out of the situation. I think personally that's a very valid point, which I feel. I don't know. Because Mr. Rajan is also nodding his head, so I think he is approving my statement. They could think of. And if not on the end of the year, probably once in 6 months or once in 3 months, they can work out the modalities and help the clients. And with the permission of Mr. Rajan, I would like to tell something on that interest. You have said that 9% and all those things. Ever since I joined the bank in 1970, the customers had always had a complaint that the interest rates are very high. Interest rates are very high. But bit of time that has been systematized. But then each bank has got an asset management committee. So they will work out the buckets of the interest. They will see how these interest outgo is going to be matched with the interest incoming. Now, supposing I gave a depositor 8% and charge 6% interest rate, which, I mean, taking into isolation the customer, yes, 6% is a very good thing, I feel. But the system will not permit. The system will say, if you are going to do this, then you are going to go into the rate. So there are certain issues. The interest rates which are fixed by the banks, Mr. Sundarajan will also agree. These are all looked into in depth by the asset management committee. I mean the committee which monitors the interest rates and keeps it changing in a dynamic fashion, so that the customer is also at ease. And the bank also is protected from any possible loss.
Srikanth, we have to look at the reverse side of the coin also. Now, if the interest rate of the advances are going to move towards south, definitely banks have to reduce the interest rate on deposits. Now you see, our interest rate on savings bank was about 4%. Originally it was 6%, 5%, 4%. Then 3.5%. Then some of the banks are now offering only 2.5%. Interest rates on FDRs, etc., etc. I remember 10 years back, we used to get as much as 10%, etc. Today, if you go to the banks, they offer you at 5%, 6%. What is that inflation rate? Inflation rate is 6 plus. So what is the real return that you get? Nothing. So the depositors, as a depositor, I will always ask, what is this nonsense you are doing? You are not paying me. I am not getting a real interest from you at all. What you give is 6%, inflation is 6.6 plus. I don't get anything at all. So the banker has to meet the battle of wits of all the sides, and then they have to fix it. As rightly said by Mr. Badri, there is an asset liability committee which puts their head and shoulder on that to see that the interest rates are determined in a manner which satisfies both. Quite often, I mean, even if you give me more. Advances people will say reduce the interest rate. Depositor will say increase the interest rate. So the banker is often caught between the battle of wits. I mean,
no, Mr. Sundarajan, I was not on reduction of interest rates per se. I was on the specific point of whether the interest subvention should not be given virtually instead of coming at the end of the year.
I agree with you. I agree. See, all the things, when a crisis comes, opportunity also comes. A crisis of this nature will make the policymakers also aware that you cannot. Why? Even with regard to this, interest subvention, you should do that. Similarly, exporters will also demand your duty drawback. Why you are holding back for long? You pay me. I want it immediately. Duty drawback. I paid the duty. I want it drawback, etc. These are the things which will definitely come. Will come. The day is not very far off.
So, gentlemen, we'll quickly move to the regulatory aspects. I want to ask you, bankers, when you joined banking, how many returns were being filed by branches, and how many returns are currently being filed by various branches? Today, it might all have become electronic, so there was no manual intervention. But the number of returns that a banker files compared to what he was doing some maybe 10 years or 20 years ago, I think has multiplied manifold. And it is not only in banking. Today, the entire country is now burdened with the demon of compliance, whether it is a company, whether it is a partnership, whether it is a sole proprietorship. We have compliances galore. Now, most of the time of the business enterprises, whether it is banking or industry, on time, there is a penalty of 200 rupees per day. And if it is not filed for months together, you can imagine what will be the penalty that is being levied on these companies. And most of these companies who don't file TDS returns on time, they may be paying TDS on time, but those who don't file the TDS returns on time are basically micro and small and medium enterprises. So there is, according to me, the compliance responsibility that has been cast over the last maybe 5, 6, or maybe even the last 10 years has been disproportionate to the economic activity. People are not finding time for economic activity. Why I am asking this to bankers is, even within a bank, I think most of the time will be spent only on generating returns. As much as in companies also, most of the time is being spent on filing your GST returns, filing your TDS returns and all that. To what extent do you think the government should address this issue so that during COVID times, when everybody has to work at 120% of their capacity to come out of this problem, what should be the government doing to reduce the compliance burden? Don't you think that at least the MSMEs, the small timers, should be rid of all these compliance formalities?
Yeah, this is a very, very interesting question.
Yeah, Mr. Badri, please.
Yeah, Mr. Badri.
Yeah. Sorry, it got disconnected, so I had to come back. Sorry.
Okay.
No, you asked a very, very pertinent question. When 1970 I joined the bank, probably we had about 200 to 250 returns. Probably Mr. Sundara also would say for that. And all are to be done manually. Multiple types of returns you will have to cull out the figures, put it into the various and send it to the Reserve Bank, and all the Reserve Bank of India itself. You can't postpone it to Monday or Tuesday, and when we do that, we get a sticker from the head office. Of course, they will take some provisional figures and then they will match it. But if all the branches do that, then there is going to be a distortion, and Reserve Bank will not look it very kindly. So there used to be a lot of returns which we have done, which we used to do. In fact, I as a trainee, I have done it. We used to call BSR return 2, BSR return 3, which is a huge book where you write the entire horoscope of the borrower. Name, who partnership, what is his capital, what is the limit, what is the liability, so huge data is put it into that, and it is sent. It will take at least for a particular clerk or an officer who said, it will take at least 1 week to prepare that statement if he is doing correctly. Some figures if he is going to give, that is a different issue. But then over a period of time, the computerization has reduced a lot lot of such work. For example, we used to have SB accounts, say about say about 100 ledgers. And we will have to give the credit on those days, it was on 1st February and 1st August. We will have to draw the products, we have to calculate the interest, we will have to check it, and then we have to apply the interest. And we were doing it on the 1st of every day. But today, all such problems are not there, and head offices of all the banks have devised their systems and systems in such a way that branches need not send the figures. Branches, the head office will pick out, they will extract the details, they will consolidate, and then they will make use of that. So, personally, I feel that what you said was correct. Pre-computerization days, it was very difficult, it was very cumbersome, lot of efforts were put, lot of manpower was driven towards this particular task. But today, with computerization, I don't think with total computerization, connectivity and all, our head office is able to pick out the data within no time. By the time you close, your balance sheet is ready on 31st night by 12 o'clock or 1 o'clock. So,
but Mr. Badri, the point I'm trying to drive at is, despite the fact that everything is seamless, when we go for audit as chartered accountants, we are always expected to report whether the branch has sent this report, the branch has sent that report, and all that. We fail to understand why the branches have to send, because everything is seamless. And that is one thing. Secondly, I really don't know so many reports from thousands of branches who is reading at the controlling office or the head office level. Now, I'm only trying to drive the point that we are spending so much of energy and time on compliance related matters that whether it is bankers or industrialists or small time businessmen, they are not able to concentrate on their economic activity of generating revenues. I would feel that notwithstanding the fiscal and the monetary measures, the government also has to somewhere down the line reduce the compliance burden at least for the next 1 or 2 years, so that we see off this COVID-19 and then we are strong enough to comply with all these compliance requirements.
Very good. What you have said is by a practical experience. When you come to the branches for audit or you come to the zonal office for audit, what you said is a very wonderful point. I do it, but then it is the individual bank's acumen to upgrade their systems and procedures such a way that the flags should automatically come rather than the manual intervention. See, earlier, all the NPAs were classified manually, and they were leaving out smaller accounts, and later on, when at the end of the year, we found the smaller accounts contributed the larger NPAs, because they were all pushed under the mat. There were no checks and balances. But later on, the banks thought enough is enough, and the system used to classify as NPA and throw it to the head office. So what you said is correct, and your suggestion that all these compliances can be postponed for a couple of years, and then give time for the entrepreneur to ensure that his activities are first put on place, and if there is any aberration, there are various other authorities to take. But your point is very correct. I entirely agree with you that a small holiday is to be given for all these submissions, with a request that they should ensure that all the compliances are done internally in a proper manner. Your point is well taken, and I really appreciate it.
We come to the last part of this panel discussion, where I would just like to flag one macroeconomic issue on which I don't have a solution. So I would like both of you to help me on this. Today we know that the fiscal deficit for the first quarter itself, I don't know whether it's the first 3 months or the first 4 months, has reached 83% of the annual fiscal deficit. The annual fiscal deficit as projected in the budget was in the region of 8 lakh crores. Now we have already reached 83%. Let us say 6.4 lakh crores is already done, if it is for a quarter. So on an annual basis, your fiscal deficit will be somewhere in the region of 27 lakh crores on a linearly speaking, 27 lakh crores. Now, with such a huge borrowing, my worry is whether the government will literally crowd out the borrowing, the private borrowers, and most of the money of the banks will ultimately find its way into the government to fund the fiscal deficit, leaving very little for the MSMEs or for the industries for their own survival. This is a question for Mr. Rajan first, and then Mr. Badri can chip in.
Yeah. Mr. Srikanth, your question is valid, but this is an exceptional time. We have to do an exceptional act. You see the different economies, they come out with the thing. Let us take, Dr. Rajan. Dr. Rajan's advocacy is, this is the time where you have to spend. You should not look at the fiscal figures, etc., etc. But at the same time, the past deputy governors, they have a different view. No, you have to have a fiscal discipline, etc. Now, let me give some of the things. Central fiscal deficit in the normal time, 1920, it was only 4.6%. Center's outstanding debt to GDP was 49.25%. Overall government, central government as well as the Indian government, the state governments put together, the outstanding debt to GDP was 69.8%. 69.8%. See, under those circumstances now, what is the problem in this COVID-19? Consumers are not spending. There is a demand contraction. Economy is contracted. Economy is entered into a recession mode. Now, who will do this? Even the cash-rich industrialists, they don't want. They are uncertain. They are afraid. They are fearful whether I will get a sales, whether my sales will go. In fact, you would have seen today's newspaper items say, even with regard to the listed entities, sales are down by nearly 40+%, EBITDA down by 30%. So under these circumstances, when this news comes, they say that no, let me wait. Unless you pump in funds, economy cannot be revived. Who should do this? Naturally, the government has to do it. The government has to pump rain, as economists call, pump rain. You have to do it because there is no way out. If you are going to say that no, I have to respond to this Fiscal Responsibility Act, FRBM says that I should over a period of time bring it to the 3% of the GDP, fiscal deficit should not exceed 3% of the GDP, etc. We will not be able to take over the situation. So you have to do it in a calibrated manner. Always, what is the thing? Leading economists always what they say is it sustainable? This one is sustainable. What they say is your cost of borrowing is going to be less than nominal GDP growth rate. It is sustainable. So now, if you take into account what is your 10-year, the government security yield, the 10-year government security.
Hello, is the program on? I am not able to hear anything.
5.9%. What is the state government yield? 6.4%. So what was our GDP growth, nominal GDP growth in 1920? 7.2%. When you see the GDP, the government rate of 5.9% is less than this nominal rate of GDP, 7.2, your borrowing is sustainable. Then you may counter me saying that this year, what is going to be the GDP growth? Yes, this year definitely GDP may be negative. But you should not go by that. Once there is a time lag, we should take into account what is going to be in 21-22. Definitely, the government has to do it. There is no way out. If the government is going to sit tight, who is going to do this? How will we come out of it? The more you delay, the more. That is why you will be reading in the newspaper, the Honorable Finance Minister has been exhorting all the public sector undertaking, please spend your capital expenditure, please spend your capital expenditure. What is allocated capital expenditure? You spend. Then we will think of what is the additional that we can do. That is a wise move. That is, the economists will definitely welcome this move. I am sure once they do it, the demand will start doing, because as I said, this is the first time we are finding a demand recession. Demand has come down. Demand needs to be picked up. That only the government and only the government can do it.
Thank you, Mr. Sundara Rajan. Mr. Badri, any thoughts on the same subject?
Yeah, I broadly agree with what Mr. Sundarajan says. This is the first time that there is no demand. There is funds. There is no demand. Of course, for various reasons. Probably people are looking for things to stabilize. They are full force to come and start their work, etc. But I think that will be certainly there for some more time. And I think it should pick up when the people are freely, they are able to come and do their normal work.
But gentlemen, I want to come back to the point that I made. I made a point whether the government will be crowding out private borrowers, whether the private borrowers will have opportunity to borrow from the banks, because where from the bank the government is going to borrow so much of money to fund its fiscal deficit. You think that the government will not crowd out the borrowers?
Let me answer Mr. Srikanth. The very fact that the government is going to spend the money, it is not that no, they are going to borrow from the banks only, public sector banks only. No, need not be. They can borrow abroad. They can borrow elsewhere, because the public sector banks themselves, they need the money, way of a capital. They need to give the credit. So they are not here to lend only to the government. They have to lend to the ultimate users. They think that there the focus will be there. So the government will have to think of alternative mechanisms of borrowing this money. That's how I do that. Definitely, RBI will be doing it. We would have seen, about 50,000 plus crores. They have made it available to the government this time by way of a dividend and others. Definitely, it will be forthcoming. Similarly, other public sector undertakings also, whichever the surplus earning, they will be definitely doing. Plus, the difference amount the government will make ways and means of raising it. Surely, they will not depend upon the banks.
Okay, thanks a lot. That was a very convincing explanation. Now, the session has kind of come to a close, but we have a lot of questions. And one question which I wanted to ask and I missed out was that what is your view on continuing with the 90-day delinquency norm? We have restructuring packages coming on and off, but why don't we rethink on this 90-day delinquency norm and make it at least 180 days so that every asset is a stressed asset now. So why don't we give the benefit across the board? That is a question that one of my friends have asked me. You want to take it?
Yeah, Mr. Srikanth, let me tell you, these are not decided by the India per se. There is a committee called Basel Committee. The Basel Committee comes out with the international best practices. See, we can see over a period of time we have brought it down to 90 days for the banking system. Similarly, for NBFCs also it was 180 days. It is being brought to 90 days. Having arrived at, you should not do it and they may not like it at all. See, if you are going to do it, international credit rating agencies will try to rate you that you are accommodative. That they will not permit it at all. However, on a case-to-case basis, like what the Government of India or the Reserve Bank of India has done this time, this is permissible. You may remember the MSMEs as early as 19, we have permitted the restructuring. And we said that no, it is going to end by March 2020. Whereas in the subsequent restructuring when it came, this was extended to those units which are not covered, which are also GST registered entities. So that way, the RBI, we need to place our full appreciation to our regulator. They are very careful, then they will ensure that there is no dilution.
Okay, sir. Point noted. The next question is from one Mr. Chandra Mohan. He says all recent announcements by RBI are for healthy accounts only. MSMEs started facing stress from 2018 onwards. Is there any remedy for them? Mr. Badri, you can take this question.
Yeah. Okay. It is not the case because MSMEs have always been under stress. SMEs have always been under stress. It is not only from 2018. A very valid point. That is precisely why Reserve Bank in their circular dated 6th August, they have very categorically drawn guidelines as to how these stress accounts are to be dealt with. One, exclusively for MSME with a particular level of about 25 crores or so, and thereafter for MSMEs and SMEs whose exposure is more than 25 crores. So they have very clearly given certain certain benefits and guidelines, and they have said those are all the benefits given. And still, if the MSMEs and SMEs still feel that they are hurt and they are not able to come out, they have their own associations and all those other agencies which should properly represent to the Government of India and to the Reserve Bank. And if proper convincing case is made out, they will further dilute or they will give some benefits. It is not that a one-time prescription and it is for all time. I think they will do that.
Okay. There are a couple of questions which we have already covered, so I will not raise these issues before you. There is one observation by Ananta Padmanabhan, retired Indian Bank. Sir, giving loans to affected parties is a welcome move, but in the process it should not add to the NPA list of banks who are suffering with the existing sticky advances. Now, depositors are very much worried about the interest rates falling and the safety of deposits too. Is it necessary for this worry? So I think he is making an observation. I think it's a valid observation that, as the interest rates keep coming down for depositors, particularly senior citizens, they are most affected. Would you like to share your views, Mr. Sundarajan?
Actually, yeah, I am also a depositor. I also feel the pinch when the interest rate comes down. We learn banking after retirement. We learn more of banking than when we were the chairman or the general managers, etc., etc. Yes, I am also an affected party. I also feel that now why that interest rate should come down. I also do that. And another thing, Deposit Insurance Corporation is there. Recently, the Deposit Insurance Corporation cover has also been increased to 5 lakh. I agree. 5 lakh is also not sufficient because people save much more than the 5 lakh. I was just talking casually some of the bankers from the elites. Now what are happening is people want to ensure that the money is safe. Many people are opening different accounts with different banks and see that the deposits are maintained at 5 lakh. This is not happening across the board. In some of the cases, this is happening. At the same time, what the banks need to do that is they should take care of the interest of all the stakeholders. They cannot look at only one. In fact, when I answered this interest rate, I said we have to take care of the interest of the depositors also. So they should ensure that their operation do not result in losses under no circumstances, because the intended introduction of the bill which was withdrawn, there is a threat. The depositors should also participate in the bank's loss. So luckily it does not come. But there will always be lurking fear. Suppose it gets introduced, what will happen to my deposit? So the banks have to give a confidence to all the stakeholders, including the depositors, saying that we will take care of our operation in a healthy manner, that it will not result in losses at all. How they should do it? As rightly said by Mr. Badri, this is only through the monitoring of this thing. They need to monitor. With an advance borrower, it should become a friend, philosopher, guide. Like a doctor, if the advance party has some problem, he should come and say. And a banker should never cut the body of the borrower according to the cloth that he has. Either you trust the borrower fully or don't trust the borrower. You give him what he wants or don't give him. Or justify him that this is what is required. And he says, I want 50 lakhs. So 25 lakh is only within my power. Okay, you give me 25 lakh. Any underfinancing is also equal to sickness. That will not do. So it calls upon lot of responsibility on the bankers to see that their operations continue to be profitable. They become accountable to all the stakeholders. This is my thing. It is possible. It is not something which I am saying utopian. It is possible. You have to think on the new line. I mean, you have to generate financial innovations has to come. This is one of the financial innovation, I would say.
Thank you very much, gentlemen. Yeah, yes, Mr.
I have a
Badri.
point. See, the apprehension of the gentleman is very genuine. It's a normal, common man's feeling is then when he sees a plethora of benefits being given during this time, a suspicion arises whether this will be freely distributed. It is not like that. See, each one has to make an application. The bank will do a due diligence. They will have to follow the guidelines issued by the bank from time to time with regard to KYC, the credit policy of the bank, etc., and see whether it fits into any of their tailor-made schemes, and then only he will have to distribute the advance. Then there are post-sanction scenario where he will have to closely monitor the account. So all these procedures are very well documented and explained to the staff who are in this process. So I personally feel that we need not have to have any such apprehension, though the apprehension is very genuine. I have full appreciation for the person who has asked this question, which gave us an opportunity to tell how the banks disburse the loan and monitors and they take action. Thank you.
Thank you, gentlemen. I think we have come to the close of this excellent panel discussion. Most of the other questions are all repetition, so I will not bother you. I think it has been a wonderful discussion having two accomplished bankers in our panel, and I have personally been enriched by the way both of you have taken the questions and given us convincing answers, and I'm sure that the viewers have also been equally enriched, if not more. And on behalf of Swatantra TV, let me thank both the panelists for having given your time and answered all our questions to our satisfaction. Thank you very much.
The good mean the credit goes to the moderator. How the moderator moderate, bring the best of the panelists. So our compliments to you, sir. Compliments.
Thank you.
Surely. The moderator is the Sutradhari. You know, he runs through the entire program and he says the best is got from the panelists. Well done, Mr. Srikanth. Kudos to you. Good luck to you.
Thank you.